eyes are on the USDA's highly anticipated WASDE report this Friday. From corn and soybean yields to global demand and stock levels, the market is bracing for clues that could set the tone into harvest. I'm Johanna Bota, and here to break down what's at stake is Bertrand Oesterle, StoneX's VP of Clearing and Execution Sales. Welcome, Bertrand. Good morning. How are you?
I'm good, thank you. Yourself?
I'm good. So this Friday, September 12th, we have the much-awaited WASDE report. What is the market expecting?
So the first thing that the market is going to look at is the update on the yields, especially for US corn and US soybean. So we've had a lot of noise from private analysts about the August figure, which came in as a record number. And usually, historically, when the USDA comes in with a big figure in August, it has a tendency to reduce those figures from September all the way to January. Right. So this September 12th report could be the first reduction in those figures. So in August, we saw 188.8 bushel per acre in corn from the USDA and 53.6 bushel per acre in soybean. Since then, we've had, as we mentioned last week, some less favorable weather in the US. The crop conditions have fallen a touch. So when we look at those crop conditions, the corn is 68% good to excellent. The soybean is 64% good to excellent. So those figures have fallen on less favorable weather, but also disease issues. And they are still well better than the 5-year average of 57 and 59% respectively, but we have seen that fall in good to excellent ratings. So initially the market was estimating that the USDA report might come a bit aggressively on the yield reduction. So the market was talking of 184, 185 bushel per acre in corn, 52 to 53 bushel per acre in soybean. Now, over the past week, we have had 3 surveys, and those 3 surveys were very interesting because they show that actually the market is not expecting such a correction. So if we look at S&P Global, they actually came higher than the USDA. They came at 181.1 bushel per acre in corn. They came in at 53.8 in soybean. We also had an Allendale report that came out with a survey of 187.5 bushel per acre in corn and 53.3 in soybean. And we had our own StoneX survey. We came in at 186.9 in corn, 53.2 in beans. We also have LSEG poll pre-report, and the average analyst estimate is the 186.2 in corn, 53.3 in beans. So it looks like it's not as aggressive as a correction which is expected pre-report. So all eyes will be on those numbers.
I see. And beyond U.S. yields, what else should we be looking out for in the report this Friday?
So there's two more elements that are going to be interesting. If we anticipate that there may be a correction in yields, that means a potentially lower production, that should feed into lower US stocks, that could also feed into lower world stocks. So we're going to look at those stocks figures. The pre-report estimates show a modest correction on the stocks, and this is also something that we have to put into context with China. China is still not buying US soybean. The August soybean imports from China were actually a record, 12.28 million tons, and there's no US soybean in there. So the window of opportunity for the US to sell to China is usually from September to January. The more we delay the start of that window of opportunity, the more it fades away. So the USDA has a tendency to play the zero-sum game. They take some figures out here, they put it back there. So people expect that potentially the USDA could reduce the demand side of its report by looking at the fact that China is absent. So in a way, it may impact the stocks less. However, the element that everyone seems to agree on is that the biofuel demand in the US remains firm, and that should feed into lower stocks in the US. So to sum up, we're going to very much look at those corn and soybean yields, but also the demand side in the report and the impact on the stocks.
And is there anything else that we should be looking out for in corn specifically?
So corn is starting to be harvested in the US. We're 4% harvested so far, so it's only the start. But the weather for the coming week is expected to be warm and dry. Therefore, we should see a pickup in the harvest pace, and that could put some pressure on prices. Also in Ukraine, the harvest is starting as well, and we've seen higher estimates of potential production. We're now in the 29 to 31.3 million ton range. Also, we've got Brazil, which is still planting its first new corn crop. It is 12% planted so far, according to Ag Rural. It's slightly slower than the previous pace of last year, 15%. And to finish with Europe, the situation in Europe is kind of stabilizing. So if we look at the French Agrimer good to excellent ratings for maize in France, they're still 62% good to excellent. So yes, it's still a far cry from the 85% we had early June, but it's 3 weeks in a row where we've got 62%, which means that we're not deteriorating anymore. And in terms of output estimates, it's still around the 55 to 59 million ton range, which is below what we had initially anticipated at the start of the season, which was 58 to 62, because we have had adverse weather.
Okay, so that's it for corn. What about oilseeds? Is there anything that we should be watching for?
Yes, there are some harvest progress and planting progress updates. So if we look at Canada, the Canadian canola area is being harvested. Some 10% of the area is already harvested. We're hearing so far that the quality is good. We've been given some yield indications of about 40 bushel per acre, which is about 2.25 ton per hectare. I thought that was a bit on the low side, but I'm being told that it's pretty normal, and we're going to wait for further updates to have a better view of the overall crop. But StatsCan is still looking at a 19.973 million ton crop, so it's still a bigger crop than last year. Then we have Ukraine. Ukraine is starting to plant its new winter rapeseed area. There's been some beneficial rains recently, so that's going well. But the issue in Ukraine is that the government, and especially Zelensky, had signed off on a 10% export tax last week. And we're being told by UAC that it is causing absolute mayhem in terms of custom paperwork. And we're being warned that maybe over the coming week to 2 weeks, we might have a halt to export because of the difficulties on the paperwork.
I see. Okay, and last but not least, let's move on to wheat. Any updates there?
So last week we spoke about Argentina, saying that Argentina's wheat area is fully planted, that the rain had been beneficial. We've had some tweak on the updates stating that in the Pampas region there may have been excessive rain. So we're going to have to monitor whether there's some damage or if it's going to be beneficial in the end. In the US, winter wheat area is 5% planted so far, so it is starting to happen as well. And then when we look at Ukraine, the Ukrainian crop that has just been harvested is getting bigger and bigger. So the more it's being counted, the more that figure improves. The Agricultural Ministry is studying that it's 22.05 million tons. Then in terms of a new crop, the winter wheat area is starting to be planted as well. The government put out a 4.78 million hectare estimate, and that is bigger than the 4.5 last year. And we are being told also that the export pace is picking up, but it's still lagging compared to the same time last year. And then the Russian side, we've had some Sovecon estimates that came in as well, 86.1 million tons compared to 85.2 previously. We also hear that the Russian FOB prices are falling, and in terms of exports for September, Sovecon is looking at a 4.1 million ton estimate, which is lower than the 4.4 the previous month and also lower than the 5.1 last year. So lower prices, but still a modest estimate so far.
Okay, one more thing. So if Russian wheat export prices are coming down, as you just mentioned, is this once again going to put pressure on Euronext Paris wheat?
It is, but it's not the only story. So yes, especially yesterday and the day before, we've seen Paris getting some of that pressure from lower offers from Russia. But the story is a bit more complex in the sense that we've got the September contract getting off the board. It's been very interesting because it went down to 170 on the 8th of September and it's coming off the board today. The 8th of September was important because it was the delivery certification date, and that 170 is just a technicality.
Okay.
But it puts a chart mark at a very low level, which is going to comfort the specs when they look at the overall long-term chart. Then the December contract reacted straight away on the 8th of September once the delivery certificates were declared, and we rallied back to 191.5 after having made a 188 contract low. So it gave a bit of hope that maybe once the September contract gets off the board, that front pressure is going to go away and we might have a period of consolidation. So the trade is very focused on that period of consolidation. They think that taking the September out of the board, looking at a WASDE report on Friday that may be supportive, we might have a period of consolidation, we might have a bounce. Now, the problem with this is that it is being challenged by the bears. The bears are still very much talking of a very strong euro-dollar in their estimates. The Dec EuroFX rallied to 118.49 this week, and the specs are still very much scaring the trade by saying that it could go up to 125, 130, 140, even 150, some mention. If the euro-dollar does indeed go up, it's going to be catastrophic for EU exporters, for merchants, for the producer, farmer side. It's not what the trade wants to hear. And when we ask why do we think that the EuroFX could go up to the specs, their answer is that it's not related to strength in the Eurozone, especially when we consider that yesterday the French government fell. It's more about the specs looking at Trump getting his way for getting a US rate cut or cuts in Q4.
Yeah.
So we've got a bit of a dichotomy with the specs still looking at a heavy EuroFX weighing on Euronext at a time where Russia is also competitive. And on the other side, we've got the trade looking at a potential consolidation phase. They also, on the trade side, believe that the consumer cycle is going to start. And on that consumer cycle, we've had very different opinions. So the French are telling us that the French consumers are not very well covered. Some are not even covered for September. Some are covered up to December. But we also spoke to some German participants this week, and we were very surprised by what they told us. They told us that domestically, the feed consumers in Germany and the milling consumers in Germany are very well covered to December, some 70 to 85%, and they are also already well covered from January onwards, with some already 50% covered. So that consumer cycle, which is expected to start and pick up pace, some are saying it's already done.
Yeah.
So it is going to be interesting to see how it pans out at European level. Now, the Germans are telling us that from an export point of view, there is an issue. Farmers are not selling, the export pace is at a historical low, and that farmer selling retention is affecting the export pace. And finally, the bit that has been in focus as well is the Dec March spread. We've been talking about it for a few weeks. It still remains around the minus 650 area. The Dec open interest has ballooned again to about 406,000 lots. The March is also growing to about 120,000 lots. It's a big OI with a big spec short of 257,000 lots. That Dec March again is going to be very much in focus once we get close to the 17th of November expiry on options, and from the 1st to the 20th of November, everyone is expecting that Dec March to potentially rally from a trade point of view, because the specs, the funds in particular, will have to eventually roll that position.
Bert, thank you so much for all your time and for that wonderful explanation of everything. And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.